Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Intel.
If you find our talks useful, please consider subscribe, like, and comment underneath.
It is Saturday, January 17th, 2026. And, we have to address the elephant in the room, or maybe the elephant that somehow learned to fly.
I think that's a good way to put it.
I mean, if you had told me back in, say, 2024 that we'd be calling Intel a high-growth, government-backed fortress, I would have said you were crazy.
Oh, everyone would have. I remember 2024 so clearly. The sentiment was just toxic. It was like the most hated stock in tech. Dead money, value trap, a relic. But here we are.
And the script has completely flipped. We're talking about a stock that gained, something like 84% in 2025 alone?
84%. Just let that sink in for a second.
It's not a dusty old legacy company. That's a growth stock.
So we have to unpack this. For years, the story was just, can they catch up?
Yeah.
Can they stop the bleeding? And now it's Intel is the U.S. manufacturing fortress. What on earth changed?
Well, it wasn't one thing. It was a brutal, calculated pivot. First, that national champion label. In 2024, it felt like just marketing.
Right, just fluff.
Today, it's a structural reality. Under the new CEO, Lip Bhutan, they've been so aggressive, they didn't just trim fat, they did surgery.
You saw the expense numbers.
Yeah, they cut OpEx down to $17 billion in 2025. They're aiming for $16 billion this year. But here's the thing people miss. They cut the bureaucracy, not the bone.
That's the key difference. In the past, when Intel cut costs, everyone worried they were just killing their future, their R&D.
Exactly. This time, they somehow slashed the burn rate while actually speeding up the roadmap. They went from PowerPoint promises to, actual silicon in boxes.
Okay, let's dig into the financials, because stories are great, but the numbers have to back it up. Q3 2025 seemed to be the real turning point. What was the signal?
If you take just one number away from this, let it be this one. 40%.
40%.
In Q3 2025, their gross margins recovered to 40%. That was up a massive 22 percentage points year over year.
Okay, let's pause there. For anyone who doesn't live and breathe semiconductor balance sheets, why is 40% the magic number?
Great question. I mean, in this industry, gross margin is basically your lie detector test. It tells you if your factories, your fabs are actually working.
And if your products have pricing power.
Exactly. If your yields are bad, you're throwing away money. If your chips aren't competitive, you're discounting them. When they were down in the 20s, it meant everything was broken.
So hitting 40% tells Wall Street.
It tells them, our factories are working again. It proves the operational leverage is real. The turnaround isn't just a story anymore, it's math.
And it seems like they have a very large, silent partner helping them out. We have to talk about the balance sheet. This is not something you see every day.
No, you don't. This is the detail that the big hedge funds are all over. Intel got $8.9 billion in Cheetah Act grants. We knew that was coming.
Right.
But the fine print is that the U.S. government now holds, effectively, a 10% equity stake in the company.
So Uncle Sam is not just a regulator anymore. He's a shareholder. He's sitting at the table.
Literally. And think about what that does to the risk profile. When the entity that writes the laws also owns 10% of your stock, bankruptcy is off the table. A foreign takeover. Impossible.
It turns it into something more like a defense contractor. Critical infrastructure.
Sovereign silicon. That's the term. But then, to balance that out, you have SoftBank putting in $2 billion.
Which is interesting because they usually love asset-light software companies.
And that tells you they're hedging. They know all that AI software they're betting on needs a ton of compute power. By buying into Intel, they're buying the pick and shovel maker. It's a huge stamp of approval.
So you got the government safety net and the tech investor growth signal.
And that leaves them with a war chest. They're sitting on almost $31 billion in cash.
That's enough to weather any storm.
It is. Building these fabs costs tens of billions. That cash pile means they can get through this heavy spending cycle without drowning you, the shareholder, in debt or dilution.
Okay, so the money is there, the government's on board, margins are up. Let's talk product. Because if the chips are slow, none of this matters. The buzzword is 18A. What is it and why should we care?
18A is the moat. Simple as that. This is their 1.8 nanometer process. For the last 5 years, TSMC was just running circles around them.
Yeah, we're laps ahead.
Yeah. 18A is where Intel doesn't just catch up, but in some ways, it actually pulls ahead. The secret sauce is something they call Power Via.
Power Via. Sounds like an energy drink.
It does, but it's brilliant engineering. The simplest way to think about it is like a skyscraper.
Okay.
In a normal chip, all the wiring power, data, everything is crammed together at the top. It's messy, it's inefficient, you get interference.
A traffic jam.
Exactly. What PowerVia does is it moves all the heavy power lines to the basement and feeds power up from the bottom of the chip.
Oh, so you're separating power from data.
Precisely. The backside of the chip delivers the power, so the front side is just for clean, fast data signals. It lets you pack way more transistors in because you're not wasting space.
And in AI, density is everything.
It is. And here's the kicker. Intel is doing this at scale before TSMC. So for a period of time, they have a legitimate claim to having the more efficient process.
And when you combine that technical lead with the fact that it's made in Ohio, not Taiwan.
That's your geopolitical premium. If I'm a big tech CEO worried about supply chains, Intel 18A isn't just a chip, it's an insurance policy.
Which brings us to the Foundry strategy, IDM 2.0. This idea that Intel will make chips for everyone else. We've heard this promise for years. Is it actually real this time?
It's finally getting real. The key was spinning off Intel Foundry as its own subsidiary.
Why was that so important?
Because companies like Microsoft didn't want to hand their secret designs to a direct competitor. Now there's a proper wall between Intel the product company and Intel the factory. It builds trust.
And our customers showing up.
The list is getting impressive. We have a confirmed backlog for Microsoft's MAIA accelerators. Amazon's custom chip orders are growing. These are the hyperscalers, the biggest buyers on the planet.
And I have to ask about the big rumor, the one about NVIDIA. Is that just wishful thinking?
I think there's a lot of smoke there. Look, right now, NVIDIA is almost 100% dependent on TSMC.
Which is terrifying if you're them. A huge single point of failure.
It is. So just for basic supply chain safety and maybe to appease U.S. regulators, it makes perfect sense for NVIDIA to shift maybe, say, 10 or 15% of their production to Intel.
Even if it's not their top-end chip, that would be a massive validation.
Oh, if they announce an NVIDIA partnership, the stock re-rates overnight. That's the holy grail everyone is waiting for.
So that's the Foundry side. What about their own chips? We just had CES.
They showed up big. They launched the Core Ultra Series 3. These are the first real AI PC chips built on that 18A tech we were just talking about.
Is it getting traction?
Huge traction. It's in over 200 PC designs, like the new HP EliteBook. So the AI PC is not a buzzword anymore. It's shipping. And they have Panther Lake coming late this month to go head-to-head with AMD.
Okay, let's look at the chart. The technicals here look pretty strong.
They're structurally bullish. The stock is in what technical traders call an accumulation phase. The big money is buying and holding. You're even seeing a golden cross setup forming.
That's where the short-term momentum overtakes the long-term trend, right? A buy signal.
It's a classic momentum signal. And you have analysts like Melius Research with a buy rating and a $50 price target.
$50.
Yeah.
That's, what, about 27% upside from here?
Yeah, but their argument is all about valuation. They're basically saying it's so cheap compared to TSMC. The logic is, if this turnaround is real, that discount has to close.
And you can't ignore the politics. We saw that Trump bump recently.
Right. The stock jumped 10% after the CEO met with President Trump. It just reinforces that the government, regardless of who is in charge, is behind this company. The $9 billion investment isn't a one-off check. It's an ongoing partnership.
So I'm looking at the 13F filings, and it looks like a consensus trade now. The big funds are all piling in.
It's the preferred U.S. reshoring play. It's not a contrarian bet anymore.
Okay, let's get tactical. For anyone listening right now, what are the key dates? What should you be watching over the next 3 months?
The big one is just 5 days away, January 22nd, Q4 earnings.
The moment of truth.
It really is. We need to see them confirm that gross margin target, the 36.5% or higher, and we need to see solid revenue guidance for 2026, hopefully in that 55 to 58 billion tarot range.
So January 22nd is the make or break for the short term. What's next?
Late January, we watch for those Panther Lake shipments to start. Then, sometime in the first half of the year, we'll get investor days, and that is where you watch for a mega whale customer announcement.
The mega whale. Is this the Apple rumor? The M-series chips on 18A for 2027.
That's the one that just won't die. If they announce Apple as a Foundry customer, forget $50. We're talking about a whole different valuation.
Okay, I have to play devil's advocate. This all sounds fantastic. Government money, new tech, stock is up. What is the bear case? What could go wrong here?
It's so important to stay grounded. The biggest risk is still just execution. The Foundry business is unproven at this scale for outside customers.
Right. It's one thing to make chips for yourself.
But if you mess up Apple's chips, or NVIDIA's, you're done. Your reputation is gone. It's a very high wire act.
What about market forces?
Memory shortages are a real risk. If RAM gets too expensive, that slows down the whole AI PC upgrade cycle. And of course, the competition isn't sleeping.
NVIDIA's Blackwell is still the king of the hill.
It is. Intel's Gaudi 3 is aiming for the value AI market, not the premium space. But if NVIDIA decides to drop prices, that could really squeeze Intel's ambitions there.
So it's definitely not a risk-free trade. Okay, weighing all of that, let's get to the final verdict. What's the score?
I'm giving it a bullish score of 9 out of 10, and I've actually upgraded that from a 7.5 I had on it previously.
A 9. That's incredibly bullish. What pushed it up that high?
It's the shift in what the company is. It's not just a chip maker anymore. It has transformed into a government-backed infrastructure asset. And when you combine that with 18A leadership and the AI PC cycle, it's a unique geopolitical buy.
You really can't get that specific exposure anywhere else.
Nope. And it's still trading at a big discount to TSMC, even though the U.S. government is a 10% partner. That valuation gap makes no sense, and I think it's going to close.
So what's the play for the listener?
I think for an investor, this is a multi-year hold. You're looking out 3 to 5 years to that 2027 peak when the Foundry is really profitable.
And for a trader?
For a trader, there's a swing trade into the earnings on the 22nd. If that guidance is strong, you could catch a nice pop.
It really feels like a paradigm shift for the company. You know, before we go, here's a thought I want to leave everyone with.
Okay.
We've been talking about Intel catching up, being a national champion, a reliable number 2. But what if that's the wrong way to look at it? The history of this industry is cyclical. What if 18A and PowerVia aren't just about parity? What if, for the first time in a decade, they actually give Intel the undisputed performance lead again?
The return of the king.
Scenario.
Exactly. If they reclaim the performance crown, if they become the default choice again, not just the safe domestic one, then that $50 price target starts to look very, very conservative in a few years.
That's the real blue sky potential, the upside surprise nobody has priced in.
Physics always wins, and Intel is betting the farm on better physics.
A huge shift. The wind is finally at their back.
Thank you all for listening to Smart Wealth with Joshua. If you enjoyed this, please hit that subscribe button. You won't want to miss our breakdown of those earnings on the 22nd.
We will be watching very closely.
See you then.